Welcome everyone to the Get Paid on Time webinar hosted by Bibby Financial Services. I appreciate everyone attending today. I know that everyone's got a busy schedule and just finishing up some lunch or maybe eating lunch while you're watching. So wanted to run through how we can help you identify ways to get paid on time and properly invoice and handle collections with clients that could be a problem, or identifying issues before they even arise. So we'll get started. The main issue with most businesses comes down to cash flow. Avoiding late payments is really the one way you're going to be able to have predictable, regular cash flow. As a business, one of the things that's really tough is most of your clients are asking you to sell to them on terms, and you have to trust that they're going to pay you on time, because the longer you wait for that payment, the tighter your cash flow is going to get. And then how are you going to meet your financial obligations? We know that according to entrepreneur.com, 50% of small businesses have 1 month or less of cash savings. That's a tight spot to be in when customers start extending payments beyond terms. And we know that 25% have fewer than 13 days of cash reserves. So when you look at the averages, all American businesses on average are paid 34 days late according to a Tradius Payment Practices Barometer. That means that companies are getting squeezed for cash flow, and that it affects your bottom line, and it affects your ability to deliver to new customers and existing customers alike. So how do we correct those issues? So what we want to talk about today is, how do we set payment terms? How do we establish a new customer? What do we need to do to set up the right payment terms? What is the right schedule for your customer, that new customer, to pay you? Even if you have existing customers and you're trying to get those things aligned, how are we going to do that? What's the right format? How do we need to format our invoice? How should our invoicing look? I know a lot of times we have a great idea, we start a business, we're running a business, but we've never really thought about sometimes how do we format the invoice, and is there a way to properly do that? After the invoice, what happens after you've invoiced the customer, and how are you going to make sure that you don't have late payments? When you send that invoice, if you start experiencing a client that goes behind a little bit, or a non-paying customer, what do I do now? A lot of us wear multiple hats in our business, and we are the chief financial officer, the chief executive officer, the chief sales officer, the chief marketing officer, and the chief cleaning officer. So we do a lot of different things in our business, and one of the things we want to try and avoid is, how do I avoid issues with getting money in the door for services or goods that have been provided? So that's what we're going to run through today, and we'll start off with setting up the payment terms. How are we going to set payment terms for a new client? Well, the first thing we have to do is understand who we're doing business with. We need to run credit checks on all of our new customers before we provide credit terms, and we've got to set the right credit limits. Well, what does that mean? Does that mean I'm like a credit card company, and how am I going to set limits? I don't know their income. I don't know their information. There are valuable resources out there that you can pull credit information on the clients you're going to do business with to understand what types of limits you should provide. And I know as small businesses and as mid-sized businesses, a lot of times we want to provide whatever they're willing to buy, because we want our sales numbers to grow, and we want our sales numbers to grow rapidly and make sure we've got the cash coming in. The biggest challenge with that is, if we don't know who we're selling to and don't understand the credit of who we're selling to, then we're going to struggle when it comes time to collecting the payment if we don't have a good paying customer. So running those credit checks and applying those credit terms and setting the right credit limits are going to help you ensure that your cash flow is coming in at the proper time. Explicit payment terms. How do we make sure that they're clear and consistent from the start? How do we make sure the customer has a very good understanding of what we're doing? We need to set those terms. How do we do that? Is we have conversations up front during the sales process or during the take-on process that outline what those terms are going to be. If your customer wants to pay you in net 60 days and you don't want to go that far, the best time to address that issue is going to be up front during the sales portion of that conversation and during the take-on portion of that conversation, so that before you ever issue your first invoice, it is not an issue down the road. You may agree to 60-day terms because you need the new client and you need the new business, but if you don't do a calculation of how that's going to affect your cash flow, it could hurt you rather than help you. But there are ways to make sure that you do that the right way, and that is making sure you have those conversations, set those payment terms, and put late payment agreements, late payment amounts and charges in your terms and conditions of your agreement. If it's your agreement they're signing, make sure you have it reviewed and make sure you have those explicit payment terms shown. If it's the vendors or your customer's agreement you're signing, such as in the case of dealing with Amazon or Walmart or others, make sure and have it reviewed and make sure that you work through any issues you may have up front and make sure they're clearly worked through. Partial payment terms, these are situations where you may take a deposit. You may agree that half of it's going to be paid up front and the other half at the end of the project or the end of the job. And those types of things we see a lot of times on startup companies or newer companies where you're struggling for cash flow, understandably so, because you need all the cash you can to deliver on that order or deliver on that project. And while these are a good way to indicate that you may get paid at the end of the job and a good likely indication because they've already invested a good chunk of money, be careful on this one because if you collect that customer deposit or that initial payment up front and they cancel the project for any reason, you may be responsible to refund that initial payment. So if you're going to do partial payments, it is a good way to ensure your cash flow and help you out, but make sure the terms and conditions are clear on any type of order cancellation or any type of stoppage of that project, that you aren't held responsible for a refund, or that you hold that in escrow or do what you need to do to make sure that you don't get caught in the crosshairs having to refund some money to a customer because they canceled out the project. So moving on, how do we also administer what we've done? Well, we need to keep records. One of the biggest reasons why customers may struggle or your customers may struggle to pay you is if the records aren't there and you don't have copies of the records and what was agreed to, then they may be able to lean back on the fact that you don't have those copies to delay that payment to you. Maintain up-to-date records so you can identify any potential issues early on, and if you have issues, take the steps to resolve them. Be efficient in your administration. Make sure that the invoice goes out immediately once the job has been completed, and make sure you stick to a regular payment schedule. One of the issues that come up is when you start having side conversations, you don't have the records in place, or the customer's not aware of what you've agreed to because time has passed. And it's usually not the first order that's going to be a problem. It usually comes up on subsequent orders or subsequent deliveries, because that's when people tend to forget what the original agreement was they signed. They run into an issue, they start getting a little bit late, and we want to make sure that you're administrating that efficiently, because as you're sending that invoice, and we're going to talk about this in a second, how to format the invoice, but as you're sending that invoice and it's clear on what the terms are, that helps stick to a regular payment schedule where everybody's clear on communication. Communication is really the key to all of it, and making sure that you've communicated any issues up front and you administer and hold on to those records and make sure those records are being those terms are being adhered to, so that you can stick to a regular payment schedule and have a good understanding of what you're doing. So when you're setting up those payment terms with clients, how do you have effective management of what you're doing? You're going to be flexible, because some of your customers want to pay you on credit cards. Some of them want to pay you by check, by ACH. A lot of other smaller businesses, they may use an Amex or a points card because they want to get all the points, and that's how their family takes vacations every year. Completely understandable. Just make sure that whatever your preferred terms are, whatever your preferred payment methods are on how you want to receive payments, or how you manage accordingly. What kind of technology can you use to automate your manual processes so that you have a preemptive approach to payment delays? Do you want to use credit card processing technology? Do you want to use ACH technology? Do you want to use a check reader or some kind of lockbox with your bank? What are the various forms of accounts receivable management you're going to utilize to make sure payments flow and come in quickly and can be posted to your accounting systems quickly, so you know who's paid and who hasn't? What kind of flexible payment options are you going to provide? Will it be by credit card, online payment system, directly to a bank account? Identify those up front. And if you're going to have multiple options, make sure you have an effective way to manage those multiple options. Another way you can ensure payment options are flexible and meet the demand is looking at early payment discounts. This is sometimes acceptable, sometimes demanded by your clients. If you go in business with a larger client, they may demand a 1% for a 10-day payment. If they pay you within 10 days, they'll take a 1% discount on the invoice. They may require you to put that as part of your agreement in doing business with them. 2% for 30 days, 2% for 10 days, 2% for 15. I've seen it all over the board, and it really depends on who you're dealing with. But there are some customers that may say, you either have this as an option or I'm not going to do business with you. And then you have to make that choice as a business owner. Is that what I want to do? If they require it, build it into your pricing models as much as possible so that it's not a real hit to your business. But those types of incentives can also help induce payments coming in early so your cash flow happens at the time frame that you need it to, so that you can support these orders, you can support this new business, and you can continue to go out and build new business with new clients. But these types of things, early payment discounts, do exist, and it depends on the size of your client on where it's going to fall. But sometimes it is required. Sometimes it's something you may want to use as an incentive. The key to all of it, though, is what we talked about. Having your credit established with the customer. What are they going to be able to handle as a business? It doesn't do any good for somebody to order $1 million worth of product and they can't afford to pay for it. What type of record keeping are you going to keep in place to keep track of what you're doing? And then how are you going to effectively manage your payments coming in? Which stream are you going to use? And how are you going to manage that stream of payments so that you know these things are coming in and being applied appropriately? And what kind of incentives will you provide to customers for helping to pay you early or on time? Those are key things to setting the payment terms. So let's talk about the format. How should my invoice look? What should it look like? Well, believe it or not, guys, your invoicing, there are laws related to what makes a valid invoice and what doesn't. I'm not going to go into those on this conference call, but you can look up UCC law and invoicing law. If you have an attorney friend or somebody, you can ask them as well. But invoices do have to state certain things to be considered a valid invoice. It does need to state the terms on the invoice. It does need to identify what you're billing for and any amounts. It does need to identify anything within the contract. All of you on the line may have a different business model. You may be selling a different product. You may be providing a service. A consulting invoice is not going to look the same as a manufacturer's invoice or an invoice for product. But one thing is for certain, if you have a contract with your client that you're billing for, if there are things in the contract that are stated as terms and conditions, things you must show on the invoice. For example, if it's an order for a product, on that purchase order, a lot of times they will have it must be shipped within X amount of days, right? From the 1st of July to 18th of July is the shipping window. It's got to be received at our facility by X date. It can't exceed X dollar amount. It's not going to be more than X number of units. All those things, and they'll also have carve-outs in there for partial delivery of product, all that kind of stuff. But it will identify the things that need to be listed. So if you have that type of stuff on the purchase order that are in the terms and conditions, you'll want to list in here the delivery date, the day, the shipping window, when it was shipped, which carrier shipped it, those types of things. But the basics of it are you want to have a professional header. You want to always have an invoice number, something that the customer can tie to on their payment when they're paying into you, because otherwise, if you don't have that, that's part of ensuring a good receivables management system. If you don't have an invoice number or a unique identifier on the invoice, such as an invoice number, they won't be able to tie that payment to anything. So you may have 5 invoices to the same customer, and they send in a payment for $200. Well, which invoice are they applying that to? What if your open invoices on all of them, none of them total $200 or none of them equal $200 precisely? Well, the customer just sent you a payment for $200. What are they applying it to? That invoice number helps you do that. You want to also have the items, the services you're providing, the date the services were provided, any kind of quantities, rates, or hours if you're working on an hourly basis. Obviously, if this isn't part of your business structure and how you operate, then you're not going to need to put hours in there. If you don't have a billable rate, you don't want to put a billable rate. You may put a quantity and a cost, right? Or a quantity and a value. it's the stuff that you put in there is going to be based on what you're selling and the services you're providing. Always have a billing address to who you're billing to, where their location is, and always have your address and information on the invoice as well. The other things you're going to want to do is make sure you total out everything. If you do provide an early payment discount, as we talked about before, that early payment discount would need to be identified on the invoice so that it's clear that if they pay within 10 days, they get that discount. If they don't pay within 10 days, they don't get that discount. But as some of you may be aware, some of your customers may still take the discount even if they didn't pay early. So that's another thing to be aware of. But if you put it on the invoice, that gives you clear communication that if they didn't pay on time, you can go back to them and say, hey, you didn't pay within the 10 days. We really need to collect that additional amount because that's only available if you pay within the right time frame. And that may give you room to have an additional conversation with them about other business as well, and how you might be able to give them a permanent discount if they order more business from you. So there's all kind of ways you can spend that conversation, but just be clear on the invoice and the communication. Make sure you have your preferred method of payment listed towards the bottom. How are they going to pay? If it's by check, credit card, ACH, whatever format you use, make sure it's clear on the invoice of how they should pay you and how they should work with you so that nothing goes unclear with your client. Hopefully that makes sense. And as I said, there's other resources you can look to what your invoice should look like. This is just a good example for you to understand, what your invoice should look like, how it should come across to your client so that you're aware and they're aware of the terms, the conditions, what was sold, when it was delivered, all those types of things that make it much more professional for you and for your client. So after the invoice, let's talk about what happens once. This is where most of the issues come in, right? We probably all know how to invoice. We probably all know we've identified our clients, we've vetted our clients, we've done all that. Well, where do the problems are going to come in are when the invoice doesn't get paid or when there's a delay. So how do we help avoid that? How do we help prevent and handle late payments when they do happen? Well, we want to make sure we send reminders. We've got our cell phones nowadays, and I've seen cell phones where there's like 1,362 reminders on an app, right? We've all been there. We love that little red bubble. We get to the point where we ignore it. But the reality is some people pay attention to that more than others. How are you going to remind your customers, right? As they become due, as they get close to the due date, you need to set a schedule that works for your team and for you so that you aren't necessarily badgering your customers, but maybe you're just reminding them in a polite, gentle way, hey, just a reminder, your invoice is due in 1 week, in 7 days, in 10 days. Whatever the frequency you feel is sufficient is how you want to handle that. So it's good to understand that the customer is aware before we hit a due date and a problem starts to happen. What normally happens is if we send it, we hope they pay on time, and then we follow up after we realize it's late. That's where the problems tend to come into play, because if we're not on top of it and sending reminders, your customers a lot of times are wearing a lot of hats in their business too, and they may honestly forget. Their accounting person may be out sick. Somebody might have been off on vacation. So sending reminders helps to clear the lines of communication and make sure that everybody's on the same page, right? Reach an agreement with your customer if something does happen. If you're sending out the reminders, you've sent the invoice, you're sending the reminders, the due date comes, and you haven't gotten the payment. The best thing you can do is have a conversation with your customer instead of just sending emails. Have a conversation with your customer, reach out to the appropriate party, and find out why. Why is the payment late? Did it get lost in the mail? Is it in the mail? A lot of times you'll hear it's in the mail, and they may hang up and send the payment right then and there. But the reality is communication is much more effective when it takes place on the phone. So try to contact your customer and reach some sort of an agreement. If it is late and they realize they're late, try to come to some sort of an agreement. Discuss the situation, what's going on, what's happening with your business, how can I help, how can I ensure that we don't have this happen again. And in most cases, you'll come to an agreement and everything will work out fine. If you have to negotiate new payment terms, we understand that business is important, and your clients that you have, it's very hard to win new clients. And of course, all the studies you can find, it costs less to keep an existing client than it does to win new clients. So sometimes you may have to negotiate new payment terms. You don't want to lose a client. You want to discuss maybe some temporary payment terms and stipulate a time frame and an end date. It may be that you're allowing them to go a little bit late because this is a low seasonality for them. So some businesses have seasonal needs and seasonal issues. Sometimes in the spring they're busier than the fall. Sometimes they're very busy in the fall and have a lot more cash flow than they do in the spring. Well, you might have to adjust your payment terms at a certain time of year to meet their demands and their needs so that you also can keep a client. Whatever flexibility you provide here, just make sure that it's a stipulated time frame and there's an end date to it, or if you're going to do it on an ongoing basis and agree to it, have the agreements re-signed if there are agreements in place. Whatever you decide to do, just make sure it's clear and agreed to by all parties and you have it in writing. That's the key. Make sure it's agreed to by all parties and you have it in writing. Maybe adjusting your invoicing frequency. Maybe if you have a client that has bad payment habits and you've seen that, maybe you want to invoice weekly. Maybe that's the key, is invoicing weekly so that you don't have issues, or invoicing more frequently so that you don't have issues. Sometimes your customers want you to invoice them once a month. Well, is that going to work for them? That's up to you and how the relationship goes. But the last thing you want to do is have these issues happen multiple times and then all of a sudden you're trying to combat that when the customer's behind by $100,000. That's impactful to a business. Sometimes it's $10,000 that's extremely impactful to a business. It all depends on your business size. But the reality is customers that pay late can cause problems, and that's what we want to help you avoid. If you have persistent late payers, how are we going to deal with it? Well, the first thing you want to do is you want to go ahead and remove credit terms. If they frequently pay you late, remove the credit terms, reduce, or completely do away with them, right? If they're paying you, but maybe they can't pay you in full, maybe they have 1 month they pay late, 1 month they pay on time, maybe you want to have a conversation with them about just saying, hey, we're going to have to put you on a different schedule or different payment terms, and maybe it's all cash up front. So those are the kind of things that you may have to do. Habitually delinquent payers are more exceptional cases, but you may have to end up threatening legal action. Now, that should always be a last resort because you don't want to lose customers, but you also can't have people taking advantage of your hard work either. There are reports out there are studies you can find where it talks about the amount of time spent on some of these bad accounts, that it would actually be more productive for a business to go after just good accounts and cease selling to bad accounts because you know you're going to get paid. And it takes a lot of stress off of your shoulders, especially as a business owner, as someone who's trying to run a business. Maybe you're the receivables manager, the accounting clerk. It can be stressful chasing down this money. So it's always better to cease business with people that are habitually paying you late, not on time, not the full amounts. They're just more of a headache to deal with than they are a help. So sometimes you may just want to cut them off. And you may have to pursue legal action if they fall greatly behind, but that should be a last resort. The other options are cash flow funding support. You can find support through accounts receivable finance, factoring. It's also called factoring. It's also called AR management. Lots of different terminology for it, but it helps free up your working capital because it releases cash that's tied up in unpaid invoices. If you've got a customer on 45-day payment terms and you want to continue to sell to new customers, but your money's all tied up in invoicing, well, as that customer pays in, you're catching up on bills, you're catching up on the other things you've got to pay. You've got payroll that's due every week, every 2 weeks, however your payroll runs. Sometimes that's a solution to help you free up that cash so that you can actually focus on running your business, because as soon as you generate invoicing, you get cash against that invoicing, and you can continue to build and grow your business with consistent cash flow to the business based on your invoicing. So it is another way, another tool you can use to help stabilize your business cash flow situation. So what does factoring do for you, right? It is quite easily one of the simplest ways to ease up your cash flow. And there's a lot of different lenders out there that do a lot of different things. but this is the one solution that is simply using what you already have as a business and allowing you to free up your cash flow that you've already generated to pay your people, pay your payroll, pay your overhead costs, expenses, all those things, and not really incur excess debt, right? There's not a debt payment related to this. This is an advance against your receivables. So you provide the goods or the services, you invoice your customer. We're going to pay up to 92%, depending on the industry, of what your receivables are. We'll help you collect the payments. Sometimes we collect them on your behalf. Depends on what type of accounts receivable department you have and how effective it is. But that could also alleviate some headcount for you and make sure that you're keeping your costs low as a business. Your customers send that payment into a bank lockbox, and then you get any of the remaining balances, right? Minus any of the fees. So you're not paying fees out of pocket. You're not having to pay fees up front. That all comes out of any remaining balances left over from the invoice advance. It's a very simple way to provide consistent cash flow for you as a business, and it's a very easy way for you to understand and have predictability in your business without stressing over when that customer payment is going to come in. It is a huge help, and has helped thousands and thousands and thousands of businesses every year to provide the services the way that they do. Obviously, what kind of slide would this be without showing you, or what kind of pitch would this be without showing you the benefits of factoring, right? So there's a lot of benefits. The reality is it comes down to being able to have predictable cash flow. It gives you more control over your business finances with the metrics that you get, that the financier provides you. It's not a debt for your company. It's not a loan payment, right? Sometimes some of the products offered are term loans for a short term that come with a high payment, and now you're chasing that payment plus your payroll plus your overheads. You're going to get paid right away for your invoices. We'll help collect the payments, and you can continue on with your business, and you can continue to bring on new business. You can focus on your business, not chasing payments. It does help you prepare for your demands and your needs as a business, and that funding will adapt to your business. It's very flexible because as your business grows, your funding can grow. All those things can happen because you're working with a partner that's helping you on that cash flow and stabilizing your cash flow. So I know that a lot of times there's questions that come through when we're talking about these types of things, and we have some questions that came through that have been sent over. So one of the things we want to talk about is how do you run a credit check on a client? That's a great question and something that gets asked often. There's a database called Dun & Bradstreet, and there are other sources as well, but Dun & Bradstreet is what we typically use and a lot of funders in our position use. And it gives you data trends on businesses as long as that information's been reported. So sometimes, most of the time we find information through Dun & Bradstreet. Sometimes we have to have our own credit department do searches on the client and figure out what that client can do. So that's one of the services we provide is credit checks on customers. And it's a very helpful tool because we can tell you when that customer may be a problem to deal with or not. We track the Moody's credit ratings and everything else as well. So we know when retailers can be a problem or when other customers might be a problem that may not be on your radar yet. Another question, what situations should you require partial payments from customers? That's a tough one. Usually we do that on contract services or services that relate to, a big project. It's not something that's recommended in every scenario, but it is something that you can talk to. We have other people that can answer a little bit more of these questions in your specific scenario, but it's usually when it's big project related. When's the best time to bring up your payments with a new customer or bring up your payment terms with a new customer? Another really good questions, up front. Always do it up front. That's the best time to do it. There's no other time you should be talking about that. You shouldn't be figuring out payment terms after you've invoiced. One of the other questions, taking somebody to court if they don't pay. I would say it depends on the balance that they owe you. We all know court cases are expensive and filing legal is expensive. Try to work with your customer as much as possible. But when it hits a dollar amount that's painful to your business and it's causing you other problems in your business is probably when you want to seek legal advice and take action. So those are all the questions that I have. that came up. If there's additional questions, or the main questions, I should say, if there's additional questions that you guys have, we have people that are available to help answer those questions. You can see the contact information on the screen. Just to run through quickly some of the things that we've done, there's a case study of a group that we helped. They were actually in 2 different countries, in the UK and in the US, doing manufacturing. We were able to put together a solution for them because we have presence both in the UK and in the US and 13 other countries aside from those 2. And we were able to put together a package for them that helped solve their need in both countries and handled the overseas payment issues that they were experiencing with exchange rates. So this is an example case study of something we were able to do, and I'm sure this presentation will be made available to you after the webinar for having attended, and you can read more about that on that. But what happens if you're interested, if there's something you want to do to help stabilize your cash flow? We'd have an initial consultation, talk you through it. You'd submit a financial package for us to review. You'll get a detailed funding proposal, how we can help you. Once you accept it, the due diligence starts. We get the legal documents out, agreement out, and we'd start financing your facility. Pretty simple process. It's not hard because we're looking at your accounts receivable. There's, if there's tax issues or issues within the business, problems, challenges that have come up, those kind of things don't bother us because we're looking at your accounts receivable. We can work through many issues and help get your business funded and get some stabilization of cash flow inside of your business. That's the basics of it. I hope this has been helpful to you. I hope you have learned and gleaned some information. I know 30 minutes is not a lot of time to really dig into some detailed information, but if you have additional questions, please feel free to reach out. Please feel free to let us know. We're more than happy to help you with any information you might have and help you identify any issues you might have and how you might be able to overcome those. So please feel free to reach out. We wish you the best of luck in your business ventures and what you're doing, and we hope you have a great rest of the week.